Welcome back to my 5 favorite people. Hope you guys are doing absolutely amazing today. Today is a Black Friday shopping spree in the stock market. And one of the best Black Friday events in a long time, since back around the Corona-19 times, you guys. There is a lot of fear in the market. A lot of fear. And I understand. My portfolio for the week is down 10%. Am I afraid? Am I scared? Not a single bit. Because if we take a look at the crypto market, I'm down 30%. So 10%, is a great day for me. But the market is doing horrible right now. We're going to talk about a couple different things in this video. I want to pretty much talk about some really good stocks some really good weekly paying ETFs you should be looking at, as we do have some really good discounts right now. And also, just to give you guys a little bit of motivation, because after my previous video I made yesterday, I see there's a lot of fear in the market. A lot of people are scared. A lot of people don't know what to do. They're having questions about their actual portfolio. Are they in the right things? And that just comes with the market downturn. So I am here to give you guys a little bit of motivation and also walk you guys through and hold your hand a little bit. So if you guys like content like this, you guys love my personality, and you want to see more content like this every single day, please hit that like and subscribe button. That way I know you guys like content like this, and I can keep making them every single day, especially while we're going through a huge market downturn. Let's go ahead and hop straight into the actual portfolio. So I'm going to share my screen really quickly. Go ahead and share you guys my portfolio. So as you guys can see, I am not doing well as well. My entire portfolio is down. It's not just you. It's not just your friend. The entire market is down. You guys can see my portfolio as of today. I am down 3.33%. If we take a look at the 1 week, it's not anything better. Look at this. 1 week, we are down 11.45%. We are down $5,700. For the 1 month, we are down 12%, $6,000. Guess what? It is okay. You want to know why? The entire market's down. Let's take a look. Take a look at SPY. A lot of people have been saying they've been waiting on a pullback. They've been waiting on the 2% pullback for SPY and Dow Jones to happen. Guess what? This is your 2% pullback. Look at the 1 week chart. 2.86%. You got even better. These are literally Black Friday and Cyber Monday sales in the stock market. It is November, you guys. You know what time that is. That is the best time to buy things online. When you guys are out shopping for your family, here in about 2 weeks, we have Black Friday sales. Guess what? We got Black Friday early. Maybe we don't have this huge dip at the end of November because we got Black Friday early. And a lot of you guys are complaining about Black Friday. Like, why are we ever complaining? You guys have been wanting the dips in the market. You guys have been wanting to reevaluate your portfolios, get into new positions. We have it right here in front of us. Now is not a time to be scared. Now is a time to buy. This is not financial advice. Never take anything I say financial advice. Take it with a grain of salt, but keep that in mind. Now, one thing I am noticing, we have you see this little curl up right here? This little curl up, the market may be doing a rebound. Could be wrong, or this thing could just be completely just dumping. We go down to about 5%. I expected in 2026, we're going to do like a 15% correction. Now, do I expect that to happen in Q4 of this year? No, I do not, because I just think there's so much, there's a lot of sentiment in the market happening right now. All these interest rates cuts. Something I did notice, I was doing a little bit of research, and if I had the chart up, I would actually pull it back up. But I noticed every single time that there are rate cuts in the market, so the news leading into the rate cuts is always very bullish. Like, the market does well. If you guys look back at the 1 month chart, every time you had a rate cut, I think the last rate cut was the 29th, right here. Let me see. When was I'll actually be correct. When was the last Fed meeting? I think it was the 29th. October 29th. Look at that. We reached the top of the market this month on the 29th. There was a huge, they call it they call it buy the news, or sell the news, buy the whatever. You guys know how it is. Look at this. We rallied. The market was setting in that we were going to get rate cuts. We knew we were going to get a rate cut. We knew we were going to get that 25 basis points cut. We got it. On the 29th, guess what? We dumped. Same thing happened if we take a look at the 3 month chart. When was September? When was the September Fed meeting? September 16th. When was that? September 16th. Right here. We had, it was a little bit of a run. We ran a little bit a couple days after. We had a drop. So what happens is that I'm noticing is that the market actually tends to run whenever we're leading into the Fed meeting. Once rates are cut, we lose that momentum. We have another Fed meeting coming up in December. When is the December Fed meeting? Look at that, already popping up. December 9th and 10th. So we have exactly about 35 days until the next Fed meeting. And what I think is going to happen, not financial advice, what I think is going to happen, we're going to see a nice little downturn. Now, could this be the little curl that we're seeing that actually rebounds us? Potentially. It could be the curl. Don't mind the dog in the background. But I personally think we're going to drop a little bit more. I think we're going to go down to at least 4%. So we still have a whole other percentage to go. And I think we will start actually seeing the run up to the next Fed meeting, the rate cuts. Let me grab the dog. Sorry, you guys. She loves to play with her toys. But I think we'll have another run up into this upcoming Fed meeting, because what's going to happen, if you guys have not been watching on previous videos, we are then going to be exiting out of quantitative tightening. We're going to be easing. We're going to be going into quantitative easing. If you don't understand what that means, the most basic way to explain it, the money printer turns on. Whenever people say the money printer go brr, it goes brr, because there's so much liquidity, there's so much money, there's just so much stuff getting pumped into the market. Rates go down, money market, savings accounts, the rates just go down, and risky assets go up. Bitcoin goes up. The risky super low market caps, they go up. I don't know if that's going to be good for our weekly paying ETFs. I actually have no clue. She's taking a toy in there. Okay. But yeah, I got on a little rant right there, right? I don't know where I was going with that. But the main thing I want to tell you guys is that it's not just your portfolio that's down. What I want to take a look at, because the main concept of this video was a lot of you guys are just concerned. You don't know what to buy right now. You're just like, or you're not necessarily, you don't know what to buy. You're like, you don't know what to do. Like, I've seen so many comments. Go look at my previous video. There's so many people saying, hey, I have no clue what to do. I'm actually not even 100% sure on my actual portfolio if it's the right thing to be doing right now, or if I'm investing in the right thing. So what I want to do, not financial advice, is actually show you guys some things that I am looking at actually picking up. You know, I actually did put some buy orders in as we are in this market downturn, and I want to talk about them. Now, the first thing I want to talk about is going to be the tech sector. I have been wanting to actually pick up a very nice position in the tech sector, but we have been at all-time highs. For example, if we look at, we'll take Maggie, for example. Maggie's a great one. Maggie is a Magnificent 7. If you guys don't know what this is, what are all the holdings in Maggie? This is like Microsoft, Tesla. Let's see. I want the full breakdown. Let's just go to, here it is, Round Hill Investments. It'll tell us exactly what's in there. Top holdings. Right. Where's the holdings at? Come on, tell me where they're at. Now I know I'm not this bad at searching things up. Okay, it just says the Magnificent 7. I want to know exactly what the Magnificent 7 is. Come on, tell me on here. I'm gonna find it. Okay, here we go. Now it breaks it down. So these are our Magnificent 7. We have Alphabet, which is Google, Amazon, Apple, Meta, Facebook, Microsoft, Nvidia, and Tesla. So those are the Magnificent 7 tech stocks. Now, why I like the ETF itself is because you guys can invest into single stocks. But I personally, in this account, I'm not investing into single stocks. I'm investing into ETFs. So the Maggie ETF itself is all of those 7 individual stocks into one weekly paying ETFs, and you guys get that exposure to that. Now, take a look at the chart. We take a look at the 1-year chart. This thing has been ripping. It's been ripping. Yeah, there were some pullbacks, but it's been ripping. It was close to its all-time highs. Guess what? This is the literal, I call this the upside down hockey stick. At this right here, if we was actually consolidating, we were actually on a nice little run, but if we were consolidating for about a month or two, this would look like a hockey stick right here. And this is an upside down hockey stick. This is the best time to buy in, because guess what? The prices are low. It's a flash sale. It's a discount to be buying in. And we know tech stocks are going to be here to stay. We know, let's look again. We know Google's not going anywhere. We know Amazon's not going anywhere. I literally just bought me a Christmas gift for someone on Amazon. I have the iPhone 17 Pro Max. Apple's not going anywhere. I run Facebook ads. It's not going anywhere. I have a literal Microsoft monitor right next to me, Nvidia. I don't have anything Nvidia. Actually, I'm lying. I have an actual gaming monitor that is an Nvidia monitor somewhere over here. And Tesla. I'm going to get that Tesla robot. The robot that's like $30,000 right now. I'm going to get me one of those. Once they actually are allowed to be bought more for the regular everyday consumer, I'm going to get me one. These companies are not going anywhere. And with that being said, they all have so many great things coming out. And that's why I've been wanting to get an actual position into some of these tech stocks. And Maggie is the perfect time to get in. Now, if you're like, okay, I love that idea, but I do not want to be actually investing into weekly pay ETFs because I don't want that capped upside. You guys can see Maggie's all-time high was $58. You're like, okay, but if Tesla does really well, if Microsoft does really well, I don't get those actual gains. Guess what? Take a look over here at MAGS. MAGS is the exact same thing. It's from Roundhill, same underlying stock. It's going to be the Magnificent Seven, but instead of having a weekly pay where you guys are getting, first off, you guys are having the dividends pay out, so it drops the NAV. You guys are able to get that upside exposure investing into MAGS. Same thing, except you guys are getting the growth aspect instead of having the weekly pay aspect and just getting kind of like the income from it. You guys are getting the growth. So take a look at the chart. You guys remember that what that chart looked like? I showed you guys the chart was like, it was like this right here. It's not, it's boom, big old boom. And this thing has been ripping. Now you guys can see we are at all-time highs. Now I don't know how long this pullback is going to happen. The biggest pullback we've had was back in April when the tariff news happened. Now, do I think we're going to do this? No, I don't. I think the most we'll do is a 20% correction. I don't think we're even going to experience that until next year. But if we do experience that, that is the perfect time to be getting into some of these tech stocks. You guys, the chart speaks for itself. You don't even have to look at MAGS. You can go and look at some of these individual stocks. Look at, let's take Apple. Apple's been doing absolutely amazing. The new iPhone dropped, the new MacBook, everything's been looking great for Apple. Look at the actual stock itself. Take a look at the 5-year chart at Apple. Look at this thing. Straight upwards. Look at the max chart. Straight upwards. You don't even see, look at that little bitty little hockey stick right there. That thing is like a little club. You don't even notice that little dip right there. But it's at all-time highs. But the thing is that, you know, if you keep putting it off, you're saying, hey, it's at all-time highs. I'm not going to buy. I don't want to buy the peak. You're going to keep saying that Apple's going to be sitting at $700. You're going to be like, you know, I really should have bought when it was $200. So that's the first thing. I'm getting on a little rant. I get kind of excited whenever it comes to some of this stuff, you guys. I get really excited. TSYY. I call this Tussie. You guys got upset me whenever I called this one Tussie. Now, this one did drop below $7. Am I excited about that? No. This actually looks horrible. If I'm being honest with you guys, Tussie does look absolutely horrible. Look at the 3-month chart. This looks bad. This looks pretty bad. My average cost right now is $8.10. We're down almost 14%, $2,000. But guess what? I'm not dropping this bad boy because this bad boy is my income producer right here. Even though we are down, guess what? This thing is going to pick up more and more shares. The most recent dividend that it paid out, $286. It was at $20 per share. But the price itself, I had 1,300 shares. Now, this thing actually reinvested. I picked up 39 shares. Guess what? If it pays the same amount out, this $37 is going to be increased a lot more. It's going to probably be about $42. So as it's dropped more, I pick up more shares. If this thing actually rebounds, which I do think it's going to do, Tesla has a great future ahead of it. I get a bigger dividend in the long term. And you guys also have to remember that we are not investing for the short term. Yes, the past week looks absolutely horrible. We're down 10% in the past week. But we're looking not just in the next week, the next year. We're looking, are these stocks, are these ETFs going to stay around 2 to 5, 10 years from now? Because we want that big dividend compounding effect. That's what we're looking at, you know? And that's why I say to have conviction in the stuff that you're owning. I first jumped into weekly paying ETFs. I didn't have conviction. I was just jumping into OT. I was jumping into this. I was jumping into that, Coney and stuff. I was just following. Everything on this list, I have conviction in. QQQI, great conviction. You know, QQQI has been, it's literally just the S&P 500, but you guys get that nice dividend aspect. You get that 12 to 14% distribution. It's great. It's a weekly paying ETF. I don't have much in there. Great. Maggie already explained this. Magnificent 7 weekly pay. Have this more as an income. W pay. This thing has been butchering me lately, but I love the actual design. I love the universe aspect of it. It's all the actual weekly paying ETFs inside of one big fund. Take a look at this right here. We're down $2,200, 8%. Nothing too crazy though. This thing will actually rebound. Once the market actually rebounds, this thing will do fine. It is leveraged 1.2 times, so it will do perfectly fine. I have no worries for W pay. Let's see what else we got conviction in. TSYY, we already talked about that. Chippy, semiconductor. This one's actually been performing very well, actually, compared to the rest of the market. I mean, I'm down $300. It's down 6%, but it's like the least that I'm down in everything. This one's doing well. We have HOW, POTW, which has been butchering me, but Palantir is going to do well. Actually, HOW is actually the one thing that's in the green. How is this actually in the green today? We're up $4 today on this thing. Wow, that thing's actually surviving, surprisingly, in this huge market downturn. That's actually pretty crazy. POTW and then MAGS. What's I going to go? Oh, last thing I want to talk about. I am seeing so many people on YouTube getting margin calls, and that's why I told you guys, do not go crazy with the margin. I literally sent you guys in the comment section saying, oh, I have like a $10,000 account. I'm going to do $9,500 in margin. Buddy, yes, a month ago, the market was performing absolutely amazing. We look at the 1 month chart. We were at all-time highs. We were looking great. Buddy, did you not protect yourself on the downside risk? Yeah. I literally tried to tell you, don't go crazy on the margin. Now, me personally, yeah, I'm still using, what, $15,000 in margin? But look at this. I have $24,000 in buffer room. I am perfectly fine. If the market dropped 20%, I am not getting a margin call. I am perfectly fine. I have $16,000 in margin. Do I have this in my bank account? No. But can I get the money? Yes. I just have to sell some crypto. I'm perfectly fine. I told you guys, do not go crazy with the margin, because margin could help you, but margin also could definitely hurt you. And right now, I'm seeing a lot of people, margin is absolutely hurting their accounts, you guys. Be careful in the market, you know? Be careful. But that's enough preaching, you know? I'm not a preacher over here. I'm simply just a kid that's trying to get some financial freedom, you know, trying to get a nice little dividend portfolio going. I'll show you guys what the tracker's looking like. No update so far, as you guys can see. Previous video, I showed you guys I was in the green for TSYY. Yeah, not anymore. This thing's down 5%. So the only thing that's holding up right now is QQQI, down 13% on POTW. Keep in mind, this is actually the dividends with, this is the return with dividends actually included. If you don't include dividends, this is my total return: 15%, 14%. 5%, yeah. So we're not looking too good, but hey, everyone's not looking good. Keep that in mind. Do not get stressed out. And like I told you guys, I'm still working on the community right now. I'm working on the Discord community because you guys need a place to actually chat. I know the YouTube comment section is pretty cool. You guys can ask me questions, but I want a actual community for you guys to actually come in and sit there and talk to each other. You know, have questions. Some of the newbies, new people that are in, like, have like a less than $1,000 portfolio, to some of the big veterans. We got the $600,000. Right? I saw with someone that had like a $1.2 million weekly pay portfolio. I want a place for you guys to actually be able to ask questions, get your questions asked, you know, share market news, share your portfolio, think that your buyers are buying, what you're selling. I want an actual channel so you guys can see exactly when I'm buying and selling things very real time. Because I know there are some people that follow my exact trades, and I tell you guys never to do that. But there are some people that follow my exact trades. I just want you guys to know, you know, more in depth exactly what I'm buying, what I'm selling, what I'm thinking real time. So I'm still working on that. It's not as easy as it sounds. I can definitely tell you guys that. But that's the motivation for today. You know, if you're thinking about buying something and you're on the edge, you're like, is this the right time, you guys? Whenever the market is bleeding, that is the best time to buy. When the market looks like a big old green sweet candy apple, you don't want to be buying. You don't want to get a sweet tooth. You don't want a cavity. You want to be nice, snug, and warm. Look at this chart. It looks nice, snug, and warm. You don't want to be buying whenever you're in the green, whenever you're cold, whenever you have conviction. Buy when it's warm. And then whenever it goes up, guess what? Then you can have your nice, sweet candy apple and get your cavity, because you'll have the dividends to pay for that cavity filling, you guys. So that's going to do it for the video. I hope I didn't make this video too long, and I hope I was able to actually help some of you guys. Let me turn this screen share off. If you guys like this video, if you guys like my personality, if you guys like me just showing and documenting my process and keeping you guys updated in the loop, I 1000% recommend you guys actually subscribing, liking the video, because you guys will get daily content every single day. Motivational videos. Videos talking about what I'm invested in. You know, if you guys ever have any questions, you want me to actually go through and talk about a certain ETF or a certain, you know, stock, I would love to talk about it on an actual video. I'm actually looking at making some live streams here soon, so I can start answering you guys' questions on live stream. You know, make sure you guys are actually subscribed. And on top of that, hit the post notification bell so you guys can get a notification every single time I post. But until next time, see you guys here soon. Have a great weekend. Stay safe out there, you guys. Market's closing.